In recent years, housing affordability in Australia has significantly worsened. According to Demographia's annual housing affordability report, Sydney, Melbourne, Adelaide, Brisbane and Perth are among the top 20 least affordable cities in the world. That's 25% of the list. Sydney and Melbourne alone are in the top 5, exceeding the likes of New York, San Francisco, London and Miami. These lists compare the median multiple of house prices relative to incomes, meaning to pay for a Sydney home outright, not even considering tax, the average person would have to work over 15 years. Now we know the scene, in this video I want to share ways you can beat the odds and get into the Australian house market yourself. Even if you don't have rich parents, fortunately you have a rich state and central government that has created countless schemes over the years to help first home buyers such as yourself. In this video, I'll be sharing all of these options. If you haven't already, please make sure to subscribe to my channel down below to keep up to date with all my future content. The first scheme is called the First Home Super Saver Scheme. This allows first home buyers to make voluntary contributions to their super fund, along with their associated earnings, which can later be withdrawn and put towards the purchase of a first home. This, however, does not include the compulsory contributions. You can contribute up to $15,000 a year under the scheme, up to a total of $50,000 as of last year. To be eligible for this, you need to be at least 18 years of age, have never owned a property in Australia before, and this is your first time applying for the scheme. The house you purchase must be based in Australia. You must intend to live there for at least 6 months of the first year of ownership, and it must be a residential property such as a house or a vacant section, and you will occupy the property as soon as practical after purchase. Essentially, they don't want you having access to the money and flipping or land banking the property. To proceed, you must apply with the ATO for a determination, where they assess your situation and decide on the amount you're eligible to withdraw. Once you have that, you then have 12 months to buy a house or a section. This can be extended out to 24 months at the ATO's discretion. Then you can contact the ATO to withdraw your funds under the scheme. The scheme obviously has a long timeline to get up to the full $50,000 and then apply prior to finding a home, so it pays to get on top of this early so you don't miss out. The second scheme is called the First Home Guarantee. If you have been looking at properties for a while, this scheme used to be called the First Home Loan Deposit Scheme. What this basically means is that the government provides a guarantee on a portion of your loan with participating banks, taking away some of their risk of lending to first home buyers. Through doing this, banks are more willing to lend to borrowers with as low as a 5% deposit without having to pay outrageous lender's mortgage insurance, which would usually be charged to those with a smaller deposit. Each year there are 35,000 places available to first home buyers, so it pays to get in early when the scheme resets each July. To be eligible, you must be 18 years or older, be single or applying as a de facto or married couple, be an Australian citizen, earn less than $125,000 as an individual or $200,000 as a couple, and be a first home buyer intending to occupy the house yourself. You must also have a deposit between 5 and 20% of the purchase price, as the government won't underwrite anything more than 15%. The type of property you can purchase includes existing property, a house and land package, land with a separate contract to build, or an off-the-plan apartment or townhouse. There are also price caps in place, as you see here, of up to $900,000. To get started, you need to reach out to one of the 32 participating banks, as you can see here. The two largest of these are CommBank and NAB. Alternatively, you can apply through a trusted broker. The third scheme is called the Regional First Home Buyer Support Scheme. This is a great option for those who are willing to move out of the big smoke to get on the housing ladder. Generally speaking, the scheme applies for properties outside of the state's capital, such as Newcastle or Geelong. There are many postcode checkers online to confirm where you're looking is eligible. The scheme is very similar to the First Home Guarantee, as the government here also guarantees a portion of the loan. Again, you can bring to the table anything from a 5% to a 20% deposit. You'll avoid the lender's mortgage insurance, and you will apply through the same 32 participating lenders. The eligibility for the scheme is the same too, except you must have lived in the regional area or adjacent to it for the preceding 12-month period. There's also a lower cap of just 10,000 places, as compared to the 35,000 places that we just saw under the First Home Guarantee. If you want to apply, reach out to one of the participating lenders or a trusted broker. The fourth scheme is the Family Home Guarantee. This is a unique scheme in that it supports single parents with at least one dependent child, giving them a leg up to afford a home. Oftentimes, these sorts of situations can arise due to a separation, so it's nice to know that it is open to both first home buyers and those that may have owned in the past. This is a beefed up version of the First Home Guarantee, as the minimum deposit required under the scheme is 2%, which will be less than $20,000 for an entry-level home in the biggest cities. To be eligible, you must be an individual, a single parent with at least one dependent child, an Australian citizen, at least 18 years of age, earn less than $125,000 a year, intend to be an owner-occupier of the home, and not currently own property. To be determined as a single parent, you must not have a spouse or a de facto partner. If you're separated, this does not count as being single under the scheme. There are also some legalese definitions of what a dependent child is, which I've shown here. And as a previous homeowner, if you apply under the scheme, you must not currently have a freehold interest in Australian property, have a lease of land, or a company title interest in land. The scheme also shares its price caps with the first home guarantee. To apply, reach out to one of the participating lenders or a trusted broker. The fifth scheme is called the First Home Owner's Grant. When you hear the word grant, always remember it is free money that you have no obligation ever to repay. However, there are usually strings attached, and it's no different here. This scheme is unique in that it's national, however its benefits and rules are different by state. At a basic level, to be eligible you must be an Australian citizen or a PR. You must have never owned Australian property in the past. You must live in the property for at least 6 months after purchase. You must purchase the property under your own name, and be aged over 18 years. Let's run through this by state. In New South Wales, the grant is for $10,000, but there's a few rules. If you purchase a new home or substantially renovate an existing home, it must be valued under $600,000. If you build, the combined value of the build and the land must be under $750,000. In Victoria, the grant is for $10,000 when you purchase or build a new home. In Queensland, the grant is for $15,000, but is only available if you build or buy a new home or substantially renovate an existing home valued at less than $750,000. In Western Australia, the grant is for $10,000 if you build or buy a new home or substantially renovate an existing one. If you're in Perth, the house can be valued up to $750,000. However, north of the 26th parallel, the value can be anywhere up to $1 million. In the other 4 states, the values range from $7,000 in ACT to $30,000 in Tasmania. So if you're looking for free money, this might be a good bet. The sixth scheme is a regional one for those living in the state of Victoria, called the Victorian Homebuyer Fund. The Victorian government has put aside $500 million to co-purchase homes in the state. As a home buyer, you can invest 5% as a deposit in a home, and the Victorian government will invest up to 25% on top of this and essentially become a co-owner in the property, avoiding the lender's mortgage insurance. As a co-owner in the property, the Victorian government will then take an ownership stake, meaning when you go to sell the property, they will take the percent value of the sale that they invested in the first place. To be eligible, you must be an Australian citizen or PR. Be 18 years or older, have a deposit greater than 5% or 3.5% if you're an Aboriginal applicant, have an income of up to $128,000 if you're a single applicant, or $204,800 if you're a couple, and this must be your first home. The property must also have a sales price of up to $950,000 in Greater Melbourne and Geelong, or in regional Victoria of up to $600,000. You must also pay for annual reviews of the property, maintain it to a suitable standard, and pay for building insurance. The participating lenders under the scheme includes Bank Australia, Bendigo, Indigenous Business, and CommBank. And finally, my 7th first home buyer scheme isn't a single one at all, but rather a stamp duty waiver, which is different by state. Stamp duties can be pricey, and many states have opted to waive most or even all of this for first home buyers or those buying less expensive properties. In New South Wales, there is a first home buyer assistance scheme. If a property is valued under $800,000, you will pay a reduced or even no stamp duty on your purchase, saving up to $31,000. In Victoria, it's a similar story, with concessional rates on properties with a value of up to $745,000, saving again up to $31,000. Queensland too has a waiver, as shown here, as do many other states including Tasmania and Western Australia. So there you have it, 7 ways to get free money to purchase your first home in Australia. I hope you found the video useful, and if you did, please make sure to subscribe to my channel down below to see more content just like this in the personal finance and investing space. Thanks for watching, and I look forward to catching you on the next one. Cheers.